Kyle, welcome to Bed with Crypto. It's really a pleasure to have you on the channel.
Oh, thank you so much for having me. Really appreciate it. Always look forward to reaching out and discussing things with the new audience. So yeah, again, thank you for having me.
Thank you for coming. Let's jump straight into it. Market cycle perspective. You've been in this in the space longer than most of our audience. When you look at this cycle, what feels different to you compared to the past ones?
Well, everything feels much different, right? And so I think it's interesting when you have well-respected technical analysts in the space who now are leading this kind of narrative that says, we've essentially hit the cycle top is in, because historically in every other 4-year cycle, Bitcoin tops in October or whatever, October, November, and then that's it. And then we go into this kind of 1-year bear market, and then it goes up again. Like that's, but there's, oh yeah, and then they would also say like the Ben Cowan kind of idea is because we broke below the 50-week moving average, and now it's been there for a while. That that is again another kind of signal to add to that narrative. But you can look at so many other things that TA guys talk about from previous cycles that like haven't lined up at all with, so they're taking, I feel like they're kind of looking at anything that makes sense for the narrative of this 4-year cycle and looking for all these indicators that they can point to one thing and say, yeah, see, this is why, it's the 4-year cycle and it's coming to an end right now. But there's a ton of other stuff that hasn't ended up happening, right? We had the halving, or sorry, with the all-time high before the halving, which has never happened before. We had, and then an entirely new structural shift in where the Bitcoin buys were coming from, and you had this big, basically Bitcoin was dominant the entire cycle up until now. We had little parts where we had like individual break-off narratives, like we had meme season and
AI season, RWA.
Yeah, and and even then, like they were pretty mild, right? I feel like most of that was it's mostly survivors. I feel like because there hasn't been many newcomers into the market. Maybe the meme season was the most where we saw kind of interest coming in and retail coming back. But other than that, like the other narratives, I think are mostly traders who have been in the space for a while, who are looking to make a play on a narrative that comes out. And so, but they didn't go like parabolic either, right? And they were kind of short-lived narratives that didn't really tend to last. So we've also had also the lack of retail that has come into the market, and this is supposed to be according to the 4-year cycle. People tell you, we've never seen the top without a parabolic run up, alt season, euphoria, and then down. We also see that this cycle looks way more linear and structural, like just kind of a solid, if you zoom out on this, from the bottom of 2022 until now, there's no part of that cycle that goes really parabolic. If you zoom out compared to the previous cycles, like the other ones like kind of like this, and then boom, boom. This one is just more linear, slow grind up, and that doesn't seem like any type of previous 4-year cycle we've had before. And so there's a bunch of other things that you could point to that say, I mean, also we've created this list of like 30 different indicators, that everyone looks at and says, see, like none of these have given the red flag yet. So therefore we're not in a bear market. So this is what historically the majority of technical analysts have said are responsible for calling the top based on like a technical perspective. And none of those things ever happened, right? So for some reason now we're pointing at a 50-week moving average. right? And like that's the golden goose that, you know, and then just the, but like if you look at how many things have been similar to the previous 4-year cycles versus how many things are different, the different far outweighs how many things have been similar. So to me, just on that argument alone, it seems like the market cycle is much, much different. Now, when you do a bunch of research and look into what actually has driven previous boom and bust or bulls and bears, it's not the 4-year halving narrative that does it. You know, in this case, it might have been a self-fulfilling short-term prophecy of people thinking that it was coming to an end, it sold a bunch, and then and so that created a lot of sell pressure. Even a lot of the ETF volume comes from retail. A lot of retail are buying ETFs. People think it's just institutional money, but it's not. It's like a lot of retail. So they're also what we call like tourists or newcomers to the industry. And they also get worried about volatility, and they also get worried about, you know, they're just kind of testing the waters. And so they get scared too, and they sell. And then they see the outflows, and then everyone points to the outflows and says, see, like everyone's selling, institutions are selling, but no, they're actually not. They're accumulating. And the deepest conviction holders of Bitcoin who've been around the longest, they're also still holding and in fact accumulating. When people say like OGs Bitcoiners are selling, that's more like mid term, not long term. It's more like, and there are a couple from way back when, but still the majority are still holding, right? So you get occasional big wallet selling here and there, and everyone says, hey, what, like, why are all the long-term holders selling? It's not all the long-term holders selling. It's like it's a small percent of how many are actually still holding. But yeah, go ahead.
I agree totally. It's like you have the bulls and the bears. There's valid reasons in both. So people go through historically between October to December of the Bitcoin halving year. The year after that will be the top of the bull market. That's usually what they say, and following the trend. But on the bull side, if you want to see the narratives, there's so many things happening on the macro level, on the administration, on the regulation. So many positives happen that they've never happened before. And the quantitative, and we've never had a bull market in a quantitative tightening year. We're at Bitcoin grew from 40K to 126K with a quantitative tightening atmosphere. Like exactly. Even though we reduced once or twice the interest rate, but it's still tightening, so which is ending soon. So I'm with you in that regards. People can give reasons to whatever supports their argument. There's reasons on both sides, obviously, and we're gonna go into depth into all of that. So you're in the camp of we haven't topped yet, correct?
I mean, for sure. I look at this more as a new structural regime change when it comes down to the cycle, and I think where we're at right now is just a mid-cycle correction, like we've seen, you know, before. Like take example the 2021 bull run, where we had a big, you know, early start of the year, a big long correction in the middle, and then another big, the final blow off at the end of the year. So this does feel like a mid-cycle correction where, you know, it's probably created at the same time because of this this self-fulfilling prophecy of people believing this is what's supposed to happen. So they risk off, they take protection money off the table. There's also a lot of kind of aligning things happening in the media that also are scaring people, right? Like the AI bubble and tech stocks, and, you know, uncertainty about geopolitics, and, you know, all this kind of stuff. So housing markets, everyone's worried about like kind of the big geopolitical picture, right? Then you got Michael Burry shorting the, you know, Nvidia and Palantir. So there's all this kind of stuff that creates this narrative right now of fear. Plus, like you said, we've never had a bull market with the conditions that we have had this time. I mean, the macro atmosphere has been super restrictive. I mean, literally, we have had high interest rates the entire time, very high, like the highest in a long time, from the Biden era. And that's never happened before. Usually bull markets start at the start of an easing cycle where liquidity is coming back into the markets. So that's just another big indicator of what's happening now. And that's about to happen. We have no other choice. America is about to, roll over $9 to $11 trillion of debt that needs to be repaid. And then they need to find ways to pay off, that off. So they're going to print money for that. Global liquidity is increasing like crazy. U.S. liquidity is increasing, growing like crazy. And then we have all these events that are happening in Q1 next year that are likely to just produce so much new liquidity into the markets. It's crazy. You've got the big, beautiful bill. That's $5 trillion of spending happening over the next couple of years that will eventually trickle and find its way into people that will put it into, Bitcoin and other assets. You have
$2,000 stimulus, I think.
You have the stimulus, which like a lot of people are comparing that directly to the COVID stimulus, but it's not. Like COVID stimulus is like orders of magnitude larger. If you look at like a one single check, and that's all you looked at, like, okay, maybe that's kind of similar, but in fact, this one is only open to people, I think, that make
less than $100,000,
something like that. Yeah, and then it's one-off check. Now they may do more in the future, right? And like, my theory is that the Republicans better look freaking amazing when it comes to midterms, right? Midterms are late next year, so that is very, very important to the Republican Party. Like, if you have a crappy economy and people aren't happy, you have a hard chance of getting your people reelected back into the Republican, full power kind of situation. And so you want to make the stock market look really good and have those investors and Wall Street and corporations like very, very happy. But you also need the support from the people. And so an easy way to get people to like you is to give them free things, right? And so, yeah, you get the first $2,000 check is probably just the start of that, right? I mean, they're probably gonna just drop it from helicopters all over neighborhoods right before the midterms. And so I think that's when we're likely to see a lot more influence as well. And yeah, there's just a lot.
There's a new Fed chair coming, and I'm assuming he's gonna be very dovish.
He's certainly gonna be very dovish, and so it does seem like this December decision will, even though for a minute there we thought it definitely wasn't going to, but now I think it's like 70% odds it does get a rate cut.
Back up, yeah.
And again, like, that is helpful for now, but even if we got a very hawkish stance from the Fed right now, it wouldn't be great for the markets. But on one hand, that we're already kind of pricing that in because last week it didn't look like it was going to happen. But we're all kind of just knowing that it's going to happen in May when the new Fed chair gets appointed. And of course, he will be appointed by Trump, and he will pick someone that is aligned with what his goals are. And we believe that it means interest rates need to get to, zero or near zero over time, which means that, like, this is when things get really interesting, right? When you get the real low interest rates, that's when money becomes cheap to borrow, and there's expansion, and you can borrow money that creates more liquidity, it creates more debt, and people build and grow and spend. And so on one hand, you say, well, is the cycle potentially going to be extended into next year, or could it keep going, and who knows how long and to what degree of, and then there likely will be at some point like a real big catastrophic event, but I don't know personally if that happens late next year or sometime in 2027 or in 28. I haven't looked that far out, but I surely don't think that we've seen a bottom. Like, I don't think we've seen a bottom or a top yet in this cycle. And so I think very short term, what we're seeing right now is the time of recording is we saw this, Bitcoin going from like 80K time of recording. It's at 88.5 or 89 or something like that. And
Yes.
and everyone's all of a sudden bullish. You get on the timeline. It's a, people flip bull and bear daily. And like literally my private groups, everyone is talking, like even everyone is talking now it's over and da-da-da. And then you even have weird things like people who swear the 4-year, like the 4-year is still intact. But then you ask them when they think it'll come back and they say, oh, like Q1 next year. Well, that's not the 4-year cycle. Like it would be, that we expect a year drawdown after that, if that's the case, right? And so anyway, I think a lot of people are confused, but I think the most important part is that we follow liquidity, right? And the what the conditions look like, and I think that we already know, at least for Bitcoin, what's happening. We know that you have banks starting to offer it to their customers. They certainly want you to collect your Bitcoin and let you take a loan against it. And so you give custody of your precious Bitcoin to an institution, and then they lend you fiat, right? And it's like, that's dangerous. And so is using like leverage in general for me is like, it's very, very dangerous. Why? Because obviously we have a very different set of traders trading against us, and it's not the market makers that most people assume. It's not the, maybe they do a little bit, maybe it's the GSRs or the winter mutes or whatever, but like it's actually the institutions with ginormous amounts of money who are watching these books and saying, when can we take most people's liquidity? So they counter trade you to whatever price it needs to go to. This is why the chart looks totally unnatural. It's like these are not natural kinds of these dips and things like that. They're not natural. Normally in a natural decline, you see like a bit more volatility, but more up and down. The direction is generally down over time if it's going into a downtrend.
Yeah.
But this is just like, boom, candle, trade sideways, and then boom, candle. Like things that we haven't seen since 2022, but on a much larger scale in a much more liquid market. So to me, that seems like, and what I always tell people on my channel is like, don't let them take your Bitcoin, right? Don't go and gamble something that they can easily take from you because they have more money than you, way more money than you. And they can look at your positions and they can push it any direction that they want. So you get liquidated.
You spoke about so many things. I agree with majority of what you said. I'll be honest with you. Like next year, and I've always spoken to the community on my channel. Next year, there's so many catalysts to benefit crypto. Like the midterm election, Trump wants to win it no matter what. As we know, he's gonna print money, or there's gonna be print money. New Fed chair, quantitative tightening ending in December, as you said. But there's the Clarity Act as well. We've never had that before. The Clarity Act. They're doing so much for crypto. Like I'm following it on a regular basis. That's gonna be the direction of we can't have a Biden type administration fighting crypto like they did, or Gary Gensler anymore. When the Clarity Act hits, that's huge. That people don't understand how big that is. That by itself is gonna change the whole game. Regarding the altcoins,
why that changes the whole game, and just for those who don't know, is because there is hundreds of billions, if not trillions of dollars that are sidelined right now of the biggest players, big companies, whatever, that would like to get exposure to Bitcoin or offer it in a service or whatever. But because there is no clarity, and around altcoins too, right? And the way that, capital formation is done around new tokens launching and new, they would all like to get access, but they're huge. They can't take the risk, right? Their attorneys are all going, no, guys, like we have to wait until we know what the laws are. And we can, even though they put out some guidance of the way direction is looking, we just have to wait until we actually have law. And then we can jump in, safely. And like, so there's tons of capital sidelined, and this Clarity Act will unlock all of that to come into the markets.
And that's a lot of people are waiting for. Again, there's going to be a dovish Fed. Trump is going to be, I don't know, he's going to be a guy that does what Trump wants, and we know what Trump wants to cut interest rate till till the lowest he can, so that he can refinance his debt and move on. And these are all positives for the market. I don't know about December rate cut. I think Trump sometimes plays his card too much. Like, he's been attacking Jerome too much, so Jerome might retaliate. I don't know. I'm not defending either of them, but he might retaliate and keep it restrictive by not cutting interest rate. I'm being very honest with you.
I mean,
don't want to.
Trump's been doing that forever, and it doesn't seem to affect Gary Powell in one way or another.
100%, because Powell is now, with the numbers of unemployment that we got, he's in a way cornered. But,
yeah, Polymarket has it now at an 82% chance that we get a 25 basis points cut on December 10th.
And several members of the federal several members are calling. I know Waller yesterday was calling for a rate cut. A lot of them. There's division in the Fed. Division there. So these are all happening. This is why I'm personally still bullish. Now, there's a couple of things as well I want to mention. Elaborate. Kyle was talking about is we've been in quantitative tightening this whole bull market. This whole bull run, we've been in quantitative tightening. That's why it's only Bitcoin to a certain level. That's what I believe. It's only Bitcoin because the demand of Bitcoin is flying.
Yeah.
Historically, quantitative alt season happens when there's appetite for risk. Appetite for risk comes from quantitative easing. You can see that in the stock market. The main, I call the Magnificent Seven, is like your Bitcoin in crypto. Magnificent Seven, they're the only ones performing in the S&P 500. Like, they're 40% now of the S&P 500 latest report. So the other companies are not as performing as strong as the Magnificent Seven because of the AI thing. So I call the rest of the companies your altcoins, Magnificent Seven as your Bitcoin. That's how my theory works. Like, it's the same concept. That's why we haven't. Quantitative tightening is ending in December.
Yeah.
Next year we're gonna have a lot of positive stuff.
Okay. And I think
this is what triggers it.
Yeah. I think it's also just important to make it clear that in these tightening environments where you've had inflation, you've had high interest rates, it makes it really, really, especially when it happens so quickly, it makes it really, like, most retail aren't in a position where they can speculate on anything, right? Housing, rent goes up, food goes up, salary stays mostly sideways. Like, variable rate credits go up, credit cards, you find auto loans are defaulting at all-time highs. So in the previous cycles, when we've had liquidity available and things weren't so rough on retail, they could come in and gamble on altcoins, right? And we will inevitably have some sort of altcoin season again, whether it is what we're used to, like where everything rips together and a blow off top. I don't know if that's going to be true, because we also have like a more logical approach to this, where people will look to see what Wall Street is going to be allocating to. And now we have a kind of an easier framework for ETFs to be posted. Like, so we can see where the smart money wants to allocate to. And then people could even break that down into, okay, who is creating these ETFs? Is it BlackRock, or is it like someone small and less significant? And then we just have too many coins now to keep people's attention. I mean, it's way different this run than it was in 2021. 2021, especially like 2017, for example, that was old. Like, retail with tons of cash, and then you had much fewer kind of KOLs or YouTubers talking about crypto, and then you had these ICOs that were happening, and that was all about the very few projects that were actually launching, because it wasn't it wasn't so crazy. There was no easy way to print a token like on Pump Fund, and so all it took in 2017 for something to fly that crazy was getting the cabal of the few influencers that were around to all be incentivized to talk about your project, and next thing rips. 2021, A bit more competition, but again, more tokens being printed, a different way to launch, more launchpad competition. But this time, oh my God, how many tokens are minted every single day? Pure value extraction. Platforms like Pumped Up Fund have literally taken $1 billion plus away from these type of lower cap gem hunters that before would have liked to have like bought into, a lower cap utility coin that had at least like a mission and some sort of real use case. But that was straight taken away from, the fees and things like that Pump earned as revenue. So you had, first of all, a market that couldn't really afford to do stuff. Everything that they did try to do was in the meme coin market, which immediately they all lost on, but they heard stories of their friends becoming millionaires. So everyone who had a little bit of gambling money lost it all. And so it's been a really hard position. So as far as altcoins go, we're going to need both that money to come back to them. They're going to need to be able to have more sustainable living conditions and earn more disposable income. And then we'll see what happens. But likely it'll be more selective kind of narratives that run versus everything exposed together.
100% selective institutional coins, the ones that institutions are using, adopting. I'm 100% with you.
Yeah.
I'm gonna switch gears here. We're gonna go to Raoul Paul has been talking a lot about business cycle, about how the ISM. What are your thoughts on that? How the extended cycle is happening, and we're moving, obviously, towards 2026.
Yeah, I mean, he just says like that the business cycle is extended, from a 4-year to a 5-year, and that's why this cycle will be extended. But again, I don't. He's looking at the business cycle specifically versus everything entirely, and so I agree with him that it's being extended for sure. What I'm not, he seems to think that it will come. I forget what he said. Like, is he expecting, first half or second half of the year to kind of come to an end?
Towards the mid of the year, that's where he thinks the end happens.
I don't think like that's where I start to kind of question him, because like I'm only kind of semi-confident that these switches and gears and valves that we have to open liquidity and more lending and more money coming to the market, I'm only like quasi confident that starts in like the end of Q1. So I do know markets price in these kind of events, 3 months or so before they actually happen. So if we think that, that we're going to have rich liquidity by the end of Q3 or Q1, then maybe markets start reacting to it in Q1 forward looking. But it still doesn't mean that retail is going to have any money. Those things, they can't price that in retail. They need to wait till they actually get the checks in the mail, whatever, jobs become better. So, and then getting the interest rates down to, 0 or near 0 rates, that's not going to happen in like a few months, right? They're going to do that over the course of at least a year, I think, or maybe even more. And so I'm not really sure why Raoul thinks that like it comes to an end midway through the year. And I think it goes on longer. I think we really have to wait until something switches and flips from this quantitative kind of, I'm going to call it easing cycle, liquidity easing cycle, and easier policy and that kind of stuff. We have to wait till that kind of stuff flips entirely. Those have been responsible for, when the Fed pivoted and said, we're going to start having higher interest rates and we're going to start quantitative tightening. Like that literally ended the 2021 bull market, right? It wasn't like those events ended it. It's super clear. Again, it wasn't the 4-year cycle thesis. It was that. So for me, I have no idea how to figure out when they're going to do that or when that's going to come to a shift. But I think that that's something we should be looking at to figure out, when, because we could have another, like at the end of those easing cycles is when the most liquidity is pumping in the market. It's the cheapest money. It's everything that's crazy. And that is a great environment for altcoins to run really hard. And I don't think that will be there by the by just halfway through next year, I think we're still going to be just getting going.
Question for you: what do you think about what's happening with JP Morgan and strategy, and like them debanking? I think Strike founder Jack Mallers and all that stuff happening. What are your thoughts there?
Yeah, the debanking thing was quite interesting. I think JP Morgan is just always been ruthless. They have a history of being ruthless, and and them saying that they're going to fire anyone who works for them for buying or trading Bitcoin. No employee can hold it. At the exact same time they were saying that, having other companies that they own out there buying Bitcoin and doing that. So
in Europe, yeah.
Yeah, so they're so they would like to offer Bitcoin loans, I think, to their customers, and they'd rather be the one that does that than Jack Mallers, for example, right? And he's building a very large Bitcoin lending platform, and he also has this treasury strategy, but I think they're kind of less concerned about that. But and then same thing with Saylor. I'm not sure with Saylor. I don't know, and I don't know the direct relationship between the JPM and this new kind of index
MSCI
rule that's being applied.
Yeah, there's rumors flying around today. I'm not sure about the accuracy. I thought I'll ask the question because you're in the States, so you would maybe know more about it. That's why I thought I'll ask the question about it. No, about like JP Morgan, they're pushing the MSCI, I think, to remove the Saylor strategy from the indexing and all other treasuries as well. So that's only if you're holding over 70%, I think, of your assets in or 50% of your assets in Bitcoin, for example. Strategy would be the only one that qualifies for that, I think, at the moment. And that's just one index out of many indexes. So it's not an insignificant one by any means, but like, do the other ones follow on as well? And is it just JP Morgan who's encouraging the MSCI to actually do that, or is it other banks, institutions? Well, I think that we kind of need to look at, and I don't have the answer to this, but you really need to look at kind of who owns strategy and to see what their kind of incentives might be. But to a lot of people, like the big banks, like BlackRock and Vanguard and others who own large shares in it, I think it's in their best interest to have strategy keep going as it's going, because you need strategy to be levered way up, keep them going, keep them building new products, keep them increasing the leverage. And then, I mean, if you're BlackRock and you hold an insane amount of Bitcoin, like, all you have to do is find his liquidation price, right, and bring it down to his liquidation price, put him in trouble. BlackRock also owns most of the media, along with Vanguard and everyone else. Like, you could just put this crazy narrative around the day, and then you get this crazy sell off. You get them to have forced to sell, and this big cascade. And then guess what? BlackRock and others are going up, sweeping it all up, and buying it. So I think that all the banks want to own all the Bitcoin, and now you're going to start to see them implementing, and stable coins as well. They want to control the stable coin.
Sure, hugely. They want to, yeah. So you're seeing, I think what you're seeing right now is an attempt for the banks to implement as many things as possible in order for them to acquire as much Bitcoin as possible, and they're going to be custodying it for everyone. And then there's some speculation around, and I don't think it's unreasonable, but I'm not sure it's going to happen either. I've maybe 50-50 on this. I have no idea. But there's a kind of a lot, people believe, and I'm not sure how many people, but for some reason it came to my attention from like 4 different sources, like people this past few days, was they believe that it's potentially will become a point where they do something similar with Bitcoin like they did with gold, where they basically say it's illegal to own it. And this is, to help the nation, move forward and da-da-da. And so if you have your Bitcoin in a custodial solution anywhere, then you have no chance at like avoiding that situation. They're not going to give back to you. They're going to give you some sort of cash where it's probably below market rate or something like that. And just saying thank you for helping America or something like that, right? And everyone that, and then everyone will be told also, hey, it's illegal now to hold your Bitcoin, so you better go to your closest bank, and then redeem it for dollars or whatever. And then once they own as much as possible, they will revalue it because they will sanction other countries from having it. So sanction other countries having it and trading it, and if they own the most supply between everyone, then they're able to kind of control the price too, right? So they'll revalue it from, let's say it happened right now, and we're at 89 or whatever. They probably redeem it for people for like $75,000, whatever, and then shortly after, once it's all done, they can revalue it to whatever they want. They could say, we believe the fair market price of Bitcoin is actually $1 million per coin, and the whole world adapts to that instantly because they set the rules, because they're the biggest owners of it, etc. So there's that conspiracy flying around. I think there's a lot of.
I don't think it'll happen under Trump administration, but if Democrats, I think, when it could happen with Senator Warren, what's it called? What's her name? Elizabeth Warren. So maybe if that happens under Trump, I think he has been debanked, and he's pushing that crypto narrative. He ran partially on it, so I don't think it'll happen under it. So, but we'll see. We'll see.
I don't think like personally. So one thing I would encourage your viewers to do, and you as well. I had a guest. Some may or may not know him, but Simon Dixon on my channel. It was like a 2-hour interview last week. It was crazy. Like it's all the stuff that I kind of assumed was true about the way the world works, but I never really had any kind of more concrete.
Evidence.
Evidence, but I say evidence carefully because I'm just taking Simon's word for it at this point, right? But he's done all the research, and everything he says makes sense in the way that he tells it. And today I did earlier my second in part 2 interview with him just a couple hours ago, and we talked about this too. And I asked the same question and kind of same line of thought you just said. And after hearing what he said the first interview and today, I don't think that Trump actually makes the decisions, or it's the things that he has said was meant. Like, do you actually think that Trump fully understands Bitcoin? I don't think he does. And so I believe that there's greater forces that are, at play when it comes down to dollars and foreign currency and Bitcoin and gold and how that all plays out on a global scale. And I think that, they just told Trump to lean into it on the campaign trail. And so I would like, I don't know if it matters so much, but also it may not, right? They might have a change. The next president who comes in or whatever might be the one who ends up under that regime doing something like that. Or they might create some sort of event, cataclysmic events, for example, something like a COVID or 9/11 that gets the public opinion to be that like there's too much risk involved with Bitcoin for individual people to be holding. It's better that our government holds it as a reserve to protect us in America and give more military power. Who knows? They were able to convince us that the Patriot Act was a good thing, where they can go spy on all of us, right? So we could be anti-terrorist, after the 9/11 thing happened. Like, they're very clever at figuring out ways to make people feel like what they're asking for is actually a benefit to the country and themselves.
It's always the end of the world. It's always, watch the media titles of anything. It's always the end of the world. Like you're talking about the AI bubble. It's always the end of the world to clickbait people to get into it, unfortunately, and they'll get you to approve stuff that are not good for you.
Yeah, I mean, just everyone should assume that the media is fully compromised, and the people who are on the screen probably haven't even read what's on the teleprompter before they sat in the desk. Furthermore, it doesn't even matter because they don't write the stuff anyway. They're just speaking it. But I think that, all the media is also owned by these same conglomerates, the BlackRock, State Street, Vanguard, etc.
100%. All right. I'm gonna again switch gears once more. Talk about sectors and narratives. Which sectors or narratives do you think are most undervalued or overlooked right now?
Well, the way I didn't always, I used to really think that we were now at a time when decentralized applications could really disrupt some existing incumbents. But that's from my mindset, understanding how things work, learning what smart contracts can do, what it's capable of, the reason why one might want to do that for, more peer-to-peer, removing the middleman who value extracts from this to the thing. I imagine that stuff would happen a lot sooner, but most of the world and Wall Street is just starting to understand kind of what Bitcoin is, and then significantly less people than that are kind of just starting to learn what Ethereum is, and then way down that ladder is everything else, including Solana and Sui and everything else. So now they're at the point. Just remember the time in your life when you first started to learn about Ethereum and smart contracts and what was possible, and wrapping your head about wait, like what? Why? What's a smart contract? What does it do? So for a long time, a lot of the biggest builders have been preparing to upgrade the traditional financial rails and the networks and all this stuff. So you have like Chainlink and XRP, and they have not been working on decentralized applications. They've been working on the infrastructure that allows the people who control the most money in the world, trade the most volume, do the most stuff. They've been building for their needs so that we can bring them on chain and upgrade their infrastructure. And then now what you see is like DeFi as a full-on narrative right now, because that's the easiest thing for people to relate to, is saying, I already know what a derivatives exchange is or perpetuals exchange is. I already oh, okay, I understand. This is now going to be popular in crypto. So now we have this perp dex narrative, which I love, actually, by the way, the ones who are doing it right. I hate centralized exchanges. I don't like to use them at all. I use them when I have to, but anyway, so I think DeFi is easy for people to understand. And so I think that if you see who's really innovating in the DeFi side that can keep up or at least meet the usability, the UX, the UI, the abstraction away from the end user of the blockchain mechanics really as much as possible, and the people that are going to be building in some sort of ability to at least be compliant if it was required when or at some point when they wanted to include America, because I still think that if you're big enough and you're in America, you're probably still gonna have to comply with things, even if let's face it, none of these dexes that are trading perps are truly decentralized. They still have all the control. They have the majority of the tokens on they're all building these proof of stake networks. So it's impossible for them to argue that they're decentralized fully to the point that it matters, where they can get away from these kind of exemptions, like someone like Uniswap probably will be able to do. But I think that, so for DeFi, for sure, I think privacy is very interesting, not because Zcash is pumping. I don't think that lasts long. I don't, but I think that what people really are interested in is the ability to obfuscate their transactions, right? And so I think that's a big deal.
Will the government allow it? Will it, for tax purposes? Let's say that's where I'm a bit skeptical of that.
So that's the within that niche of privacy. That the niche within privacy is privacy enabling solutions that have ways to allow any government agency that's allowed to serve you a warrant and ask for you to be able to reveal, for example, two sides of a trade or whatever they need to know. So the solution must be something that allows a user to choose to send a transaction or do a smart contract interaction, whatever, in pure privacy, where, if you go in the Block Explorer, it just kind of disappears, where the money went and to what wallets and stuff. But again, that solution needs to include a way where if anyone needs to see that information and they come from the government or law enforcement, they can. And I think that's because that makes it, one, legal, and two, for someone like me who would love to be able to make my trades in private, and people track my wallets. They message me when I buy something new. Hey, welcome to the club. I'm like, what? Like, obviously they're tracking my wallet. I would prefer, sending from one wallet to the next for myself. I would like the stuff to be private, so I think that is going to be very important. I haven't wanted pure privacy back in the early days of Bitcoin, and that now they're just going after Samurai wallets, which I used to use all the time back in the day, not for any illegal reasons, because I literally just didn't want people to know where I was putting my Bitcoin, like for privacy purposes and safety purposes, So I think that's really important as we move forward. So one example is it could be someone building a privacy solution that becomes legal, allows us to do payments. Another one could be someone building, privacy solutions that are a modern blockchain that allow that kind of ability for privacy when requested, but compliance with the legal requirements. You could have just certain dApps that are being built with the same kind of functionality, right? And so this narrative of private when desired, but doesn't protect you from a search warrant, for example. So I think that's a big class of things. And then AI. So AI and blockchain is going to be obviously, if you have this world of autonomous agents that are doing work with each other from different companies, they have to pay each other, and they don't want to ask. They're not going to be invoicing each other on 30-day payments, right? They're going to pay immediately through something. And you saw Google and Sui and others partner on this kind of, I think it was X402 or something, this protocol that allows these payments from agentic payments and all the ways that agents are going to need blockchain to, one, prove they did the work. They're going to need provers. They're going to need a way to automatically verify what they've been doing and pay each other. And that's and I think someone like Sui is very well in the lead for that, because they've built a different type of architecture in the way transactions are processed, right? Where the accounts are all object oriented versus account oriented. And so that just allows way more things for way more transactions between agents, for example. So yeah, I think AI converging with crypto is going to be really interesting. I'd love to see a world where decentralized, powerful LLMs exist to compete with the big boys, but I think there's also danger and complications in that. And I think there's also, I also don't know if they're going to be able to keep up with these huge, now called, integral and important for national security kinds of conglomerates, OpenAI and Google and Anthropic and all these guys like Grok. They have so much money and government support. They have no regulation on what they can do right now. There's no necessary AI alignments, safety protocols implemented. That's on a company by company level to implement it themselves right now. So I'm just not I'm really bullish on agents and payments there, but I'm not super bullish, at least not yet, on DeFi LLMs or things that are superior to the incumbents.
Okay. All right. You've advised and invested in many projects over the years, obviously. What factors do you look for before investing and getting involved in a new venture?
Well, I mean, so it obviously that the answer to that question has changed a lot after, you know, when I
Over years, yeah.
over years. Yeah. I mean, when I got, so originally I kind of went down the rabbit hole of Bitcoin in 2012, 13. And that's when I just saw, like, I wanted to be involved in this system. So I had a small company that I sold at the time in 2013, used that money to buy Bitcoin. And that's kind of what, you know, just holding on to that Bitcoin as best I could, because I didn't have any fiat left. So I did have to spend some to survive, obviously. And I was a startup entrepreneur who also used some of that Bitcoin to fund, you know, these new startups and stuff like that too. So I don't have nearly as much Bitcoin as I used to. But anyway, having invested in Bitcoin, making that, and then also doing Ethereum, not at the ICO, but at like $2. And then also Simon Dixon's platform, Bank to the Future, gave me the opportunity to invest in these companies that were kind of now are the giants and the backbone of the crypto market. So, you know, Ripple, Coinbase, Circle, Securitize, Bitfinex, and others. Like I own equity in all those, you know, pre-IPO, and that was a really awesome system because, again, I didn't know how to do proper due diligence at, you know, in 2016, 17, 18. But the platform, the way that they presented these deals was like, hey, co-invest alongside of Sequoia and A16Z and blah, blah, blah. Like co-invest with these projects that you already know because they were like series A, B, C, D, or whatever it was. Like invest in these companies that you already know and use and are like, and these huge signal investors have already invested. Like I just blindly invested in those, you know, like because of that, like I didn't do any due diligence, or I didn't know how to at the time still. So by the time I actually started doing, deploying my own capital into things, I still didn't have much of a due diligence framework. So I think today it's much, much stricter than it was in the earlier days. I had some good investments in bullish markets that, you know, did extremely well. You know, the 2021 days, whatever, mostly 2021. But mostly it's just been Bitcoin and Ethereum. That's why and then you know, I've made a lot of calls on my YouTube channel and stuff when it was a season or another season, like meme coin season. We made multiple 100x calls. But my problem is just like, I'm not a trader either. So when do I sell that thing, right? And so I still think some of those things are up from when we bought them, but I think a lot of them aren't even round trips, you know, tens of millions of dollars. But later on, we ended up, you know, creating a fund, a VC fund. And then that's when we, you know, like I really took it seriously to start due diligence. And so that's where I started learning from. And now that I'm completely have a family office and do it on my own without an investment committee or partners, I even stepped up again. And so I look at, so now I look deep in everything, you know, and what is the idea? Is there a lot of competition out there? Is it very disruptive? What's the total, you know, the TAM, the total addressable market, and, you know, what's realistic that these guys can maybe compete in? I really always like to look at the founders. So in crypto, you get a lot of guys who aren't docs and then come and ask you for, I'm like, man, there's no way I'm giving you $1 unless I find out who you and the team are, because I want to know the team is qualified to do this thing. Like a lot of these are big, ambitious ideas with a lot of competition. Like, yeah, your tech might be great if I can, you know, like, but I'm not even qualified to judge that. I can ask ChatGPT or something to, if your code is public, then I can go and, you know, have a look at it and ask a really smart AI to do some due diligence there. I couldn't even do that just a year or two ago. So that's a plus. But I also look at valuation, and in the crypto space, a lot of the valuations are unrealistic, right? They just, there's no way to logically validate what their ask is. It's actually insane. So I I do sometimes invest in crypto startups, but they have to be grounded in reality. They have to have all those things that I talked about, excellent teams, great ideas. Ideally, they have already established product market fit by getting some sort of user base established, some sort of revenue. And then I just might really like the founder. Maybe it's not him that's the most AAA founder, but at least if he's hired other all-stars around him, that are the people who are going to drive it. He's just the visionary, or she's just the visionary, whatever. And for example, I started looking at the beginning of the year. I looked at everything that looked like it was going to be booming because of the regulatory red tape ripped off by the Trump administration. So AI, supersonic passenger travel, energy, but mostly nuclear, robotics, all these things, right? And those become really interesting to me. And if you're looking in the secondary equities market, so these are brokers that are taking early founders and early team that have equity and want an exit after the Series A or B. They're selling. They broker that deal between them and accredited investors. And a platform that we built called Wealth, WLTH.xyz. We've now been doing these pre-IPO deals where we get it from a broker, and then we put it on our platform and democratize that access and give anyone in the world, you don't have to be accredited or anything, an opportunity to buy SpaceX or XAI or a nuclear company or whatever. And these things are performing very, very, very well. I mean, it takes not a lot of time before our investment at a certain valuation until we get some news that there's a new investor that bumps the valuation up even higher. And I think that's exciting too. So, yeah.
That's great. Just finally, I'm going to wrap it up. What's your best advice to the community right now, and how should investors think about the next few months?
Well, I think if it depends on how serious you take your role as someone who's managing your portfolio, and I think that, you have tools available today that are way smarter than you, and they don't have any type of agenda to increase their audience base or be right or be wrong. And that's just using, spending. It's worth spending the extra if you can afford it. If you can spend and buy the top level frontier model, let's say, for now it's ChatGPT 5 Pro, right? So if the difference between 5.1 and Pro is night and day, right? Grok, regular Grok versus super Grok, which you get for just $20 with your X premium or whatever, or Grok 4 Heavy, which takes one prompt that you give it and has 4 different agents trying to find a solution, and then they're arguing with each other at the end and come up with one final output. Like, these are, in my opinion, the best tools that you could use to help you make decisions about things. And they're going to give you practical, realistic feedback that even with your cognitive bias around what you want it to say to you, it won't, right? It's going to tell you, hey, like, as long as you prompt it right, just make sure that you tell it you're the world's best risk management and successful by generating returns to your investors, asset manager, and then give it then frame it around so it knows who its personality is supposed to be, and then ask your question and learn about how to prompt these things to work the best for you. And you have a really the best, better than any YouTuber or X accounts. This is going to give you better advice than all of them. And you can ask multiple models to compare the information. Just, that's what I would do. And if it says, don't be a dummy and go buy this new altcoin that all the influencers say is going to fly, and it says you really shouldn't do that, don't do that. It's just, if you ask it and tell it to give you the most sound advice that the best minds in the world to manage risk and an increased profit would do, then they're going to do that. And I think that's really helpful. So, what did you ask me? How to advise for people?
advice for the community how to navigate the next few months.
Yeah, so and then I think that I think right now the next few months are going to be very volatile. No one knows, and so I would say that if you like to play with leverage, you shouldn't at all. But if that's what gives you the dopamine hits that you're looking for, and you're just using a small percentage of your portfolio to do that, make sure you use low leverage, and definitely be willing to worth everything that you put on that trade, and understand that's likely going to happen, unless you're the 1% who can actually manage it, especially over the next few months with volatility coming in like heavy. So if you're spot and chill, and hopefully the majority of your assets are in Bitcoin and maybe ETH and maybe Solana or something like that, but mostly Bitcoin, because that's going to be that's what we've talked about this whole interview. Like that's what is happening on a global stage right now by all the biggest players in the world. It's Bitcoin. To a much lesser extent, it's Ethereum, and to an even lesser extent. So, I mean, the order of magnitude of Bitcoin attention versus like Ethereum attention, and then like the other majors attention is night and day. So, if you want to like the best strategy that you could do, in my opinion, is every week buy Bitcoin, and then the week after that, just buy more Bitcoin than you did last week, and the week after more Bitcoin than you did last week, and do that. And then also like live a lower lifestyle than you can afford, and use those savings to buy Bitcoin, and do this regardless of price. Don't even pay attention to price, just do it. And then after 4 years of doing that consistently, you can go reassess that situation, see if it worked out for you or not. And it always does for everybody. And when you look at someone like my mom, for example, who I got her to convert her retirement account in 2015 from fiat to Bitcoin, all she's ever done is held it on a hardware wallet and does DCA every week. And when it comes down to who's outperformed who, she's vastly outperformed me, because I think I'm smarter, and I was going and doing all these fucking stupid altcoins, and so I take my precious Bitcoin or anything that I could have instead bought Bitcoin with, and I use it to speculate on these more risky things, and I don't know how to properly trade to take profit, so they all went to practically zero. So she's outperformed me, and she doesn't do anything. She just sits on her Bitcoin cold storage and chills and works and DCAs every single week. That has been a winning strategy for everyone who's ever been in the market for a long period of time, except for a very, 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 very elite, small percentage of people who are actually really good at trading and really good at risk management. So that's like the best advice I could, but not financial advice, of course, just my opinion on how it should work.
100%. Over 4 years period, Bitcoin outperforms all altcoins. There's just a short period of time where altcoins outperformed, a very short period, and very small amount of people that win it. That's been what I advise my community, the whole thing. More than half of your wallet, always Bitcoin. 60% always Bitcoin.
And everyone thinks that that next, like they got rich at some point, at least their portfolio said that they were way richer than they ever expected that they would ever be. And then they round trip it back down to zero, basically. And then they kick themselves in the ass and think that they learned a lesson, and always think that next time I will have learned my lesson, and I'm going to sell at the top, and I'm going to know how the market works. Well, look how many people were expecting this Q4 to be the same as previous Q4s. They went and put in all their, maybe they swapped a lot of their Bitcoin for altcoins because altcoin season was coming in, and that's what made you rich last time. So we're going to do it again, and we're going to know that we're going to sell before the blow off top, because we know that how that happens. We've seen it from other markets before. We know all the signals to look for, the pi cycle top and these other 30 indicators. Like, we know all that. So this time we're not going to fuck up. But guess what happened? This time we didn't get it. Didn't happen. So if you sold all your Bitcoin, or you rotated out of Bitcoin to go into more risky alts, you lost again. So it's really hard. And I've heard all of my friends who do YouTube say the exact same thing, that they were going to know to call the top and blah, blah, blah. And it just didn't work out. Right. So that's it.
Done. Kyle, it's a pleasure having you here. Thank you for sharing all your insights with the community. I'm sure everyone appreciated it. I know I did. Guys, make sure you check Kyle's channel. I'm going to leave in the links in the description for his channels, social media, YouTube, Twitter, the whole thing. If you enjoyed this episode, drop a like, share, and tell me your thoughts in the comments. Stay sharp, stay informed, and I'll see you in the next one. Thank you.
Thanks, Badwi.